Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 29th of April. A rather quiet day, maybe in the run-up to the bank holiday, but whatever. We've seen Arrow Exploration make some progress since it came to market, especially since the end of December. Latest price action was a key reversal yesterday off the 50-day moving average. We had a bounce off that uptrend line in the RSI window as well, which is a plus. And it's also a gap fill rebound, so we had that gap there down to 13, bounced off that, and we're up today. Still waiting for an end of day close through the high of April to date, around 15 and a quarter pence. Above that, looking for 23-24 pence over the following 4 to 6 weeks, something like that in terms of the time frame. Moving along to Angle, and here we've got a situation where there's been quite a sharp another key reversal yesterday, actually. Quite a sharp rebound from just below the 50-day moving average. We've been backed on the rally that we've had, or recovery we've had since the low 70s by that falling RSI support line. It's like a sort of slingshot on the momentum. And looking for at least the top of the range here at 115 or so. If we could break that, then it's up to 140, which is the December resistance line projection on the top of the broadening triangle that we've had basically since this time last year. Only back below that 50-day line on an end-of-day close basis, down there at 92, really delaying the upside scenario. Ideally, we just remain above 97 pence, which was the initial April support. Been waiting on Card Factory just to see how it pans out after the gap higher that we had a week or so ago. Looking quite chirpy in the sense that we gapped through the 50-day line, then we've had most days in the recent past with support of the 200-day moving average at 54. Suggests that this could be a mid-move bull flag, and if that is the case, then we're looking for the top of a rising trend channel from back in the end of December, as high as 70 pence as the initial target here, and perhaps much more given that the way that shares were consolidated well above the top of the gap there at 51 pence. Time frame on 70 pence maybe by the end of next month, and early and end of day close back below 51, really delaying or questioning the upside scenario. I interviewed CentralNic earlier in the week, and it seems to be that on a fundamental basis, the company doing rather well. On a technical basis, we're looking for the shares to give us a weekly close, or at least an end-of-day close, above the resistance line there from November. That's around 134, so above that. Looking for the top of the trend channel there from September, as high as £1.65 over the following 2 months. This stage, only back below the 50-day line at 126, really delaying the upside scenario, the notional upside scenario there. On to Clontarf, which the stock which has its moments, and it seems to be having a decent moment at the moment, so to speak. Here we've got the shares with a V-shaped bull flag, sharply rising 200-day moving average after that bear trap basically below 0.22, so that's pretty healthy. Initial target here has almost been reached, so up to 0.38, something along those lines over the next few sessions. And in terms of what the big picture upside is here, probably looking for a resistance line from back in February last year. That's heading towards, if I can draw it correctly, that's heading towards the 0.55 area, and could be hit over the next month or 6 weeks, something like that. So about 0.38 up to 0.55 for Clontarf as a best case scenario target. On to Emmerson, which has probably done the right thing in terms of the technicals, slow build higher, but we had that unfilled gap to the upside near resistance, which was previously around 7.9 pence. We've basically hit the top of that rising trend channel from early last year, and now it's time to try and assess what the next level up may be. Potential target here would be a resistance line that I'm just drawing at the moment from back in September. That's heading towards 11 pence, and one would be hopeful that could be hit by the end of next month. But that unfilled gap to the upside and the breakthrough resistance, a very strong signal, and suggests that finally the momentum is starting to build on Emmerson. Requested stock is next, and here we've got ECSC group, and here you can see that after the extended base there around the 53-54 pence level, the shares have flipped up quite nicely. They've held most of yesterday's best gains as well, and the view now is that while we're above the 50-day moving average, currently around 59 pence, we could see the shares head up towards the 200-day moving average, which is around 75 pence as a minimum on the upside. That last time we were up there was October, November, so maybe 75 or even up to 80 pence could be on the cards, given that that is post-October resistance. Moving along to EQTEC, and difficult one here in the recent past. Here we've had some rather slow and weak price action, especially going into or previous to the March bear trap low. Since then, we re-established support around 0.8, and above that, we're looking for the shares to break that resistance line in the 200-day moving average at 1.1 pence, and then maybe head up to the post-November resistance area at 1.5 pence over the next couple of months. But the plus point here really is this bullish divergence line, especially versus that March low, and the way that the 50-day line is starting to rise, and that should be enough to get the shares going in a bullish direction. 0.8 pence the stop loss. Moving on to Jersey, which gapped up this week, gapped up yesterday actually, bear trap below a very sharply rising 50-day moving average. Could be third time lucky in terms of the shares breaking the £2.20 level. If we can do that on a weekly close basis, that would be fantastic, and suggest that the shares could head up to £2.70 over the next 2 to 4 weeks. The unfilled gap to the upside and the break of yesterday's high, a 199, a decent technical signal, and 199 probably a decent end of day close stop loss as well. Just 3 stocks to go now. One is a recent favorite, Mila Resources, which just nudging into higher territory here. Bit like Emmerson, we've had a gap to the upside through resistance, and best case scenario here is over at least the next couple of weeks is to hit the top of that rising trend channel from February at 7.5 pence. Upside valid while we hold above the top of that gap there at around 5.25 pence. Interviewed Orosur this week, and looks as though the shares are sort of back in the game for the bulls, just breaking that line of resistance from January around 11.1 pence, and above that on an end of day close basis could be looking at 14-15 pence, which is post-January resistance for the shares. Looks like we've got decent support there, just under 10 pence, so that's a stop loss zone if you're trading the shares closely. Finishing off with the perennial bear target Tern. Here we're looking for the shares to break that line of resistance from back in May last year. We've had a nice bounce off that bullish divergence line this week, and the other plus point is the way that the 50-day moving average is rising. That should at least give the share scope to head up to that resistance line there from December at 18 pence, and if we can break that, then it would be back into the low 20s, but at 18 pence, if we can break that resistance line, looks to be the initial target. That's it from me. More updates over the weekend.